Hey, what is up, guys? Welcome to the second video in the training. And real quick, we are just going to go over what exactly is fundamental analysis. I'm sure most of you guys are familiar with the general topic, but just so everyone's on the same page, just a quick overview. So, what is it? So, in short, fundamental analysis is the analysis, or at least if you're talking about currency fundamental analysis. You can also do this with stocks, commodities, and that all means different things because they all have different drivers for them. But in terms of the FX market, it's the analysis of a country's current economic conditions, monetary policy, which is central banks, fiscal policy, which is government spending, political atmosphere, right? Who's in office, what parties are doing what, elections, etc., and geopolitical events to gauge the current worth of a country's currency and capture price fluctuations based on these shifting factors. Now, I highlighted current worth and shifting factors here because essentially you make money on the changes that happen, right? If everything has stayed the same for a country, I mean absolutely everything, then the currency is not going to gain a ton of strength or a ton of weakness, right? Just from a fundamental standpoint, there's no reason for it to, right? Everything is exactly the same. However, when things shift, and of course, as we know, things always shift, there's always changes. When things shift, that either causes a currency to become a little worse, right? Overall fundamentals are negative, or a little bit better. And based on these shifting factors, currencies go up and down in value, and we look to trade that, right? So, what kind of things affect currency values? We've already touched on this. Things like current economic conditions, right? How is inflation going? How is the economy? How is employment? Is there a high unemployment rate, low unemployment rate? Things like that. Central banks, what is the monetary policy? What are central banks doing? Are they raising interest rates, lowering interest rates? Are they implementing a quantitative easing policy? And again, if you are newer to economics, newer to fundamental analysis of currencies, these sound complex. I absolutely get it. Please trust me, they are not. Okay? They are fancy words, but it's not complicated. Geopolitical issues, right? And that could be so many different things, from like a pandemic, like we saw with COVID, or it could be, like I said, trade wars, tensions, actual wars, things like that. Then we have, politics, government spending, elections, all that good stuff. All these different types of things affect currency values, and some things pop up that you don't even think about. Like I said, COVID, there was huge price swings in currencies you could have taken advantage of, right? That's not really something that most people really think about, but now that is something to think about, right? Pandemics, that is something that definitely affects currencies. So how are we going to use it? Well, as traders, we use it to show how other traders and banks and the guys moving things around, how they are valuing each currency, because everyone is looking at it under a similar lens, right? And so if the current drivers are bullish or bearish for the currency, then of course they will be buying or selling, and we want to take advantage of that. So this gives us an edge. We know what other traders are thinking, how they're trading these currencies, and that gives us an edge, and it gives us a bias in which to take our trades on. If everything is looking good for a currency, we know that the guys moving the markets, and I don't want to sound like a conspiracy theorist when I say that, because trust me, I've heard so many trading things about banks and how manipulative they are and how they do things to retail trader. That's not what I'm talking about. All right, I mean legitimately, they buy a currency because the overall fundamentals are good, right? That's just how markets work. And so we are going to definitely touch on this a little bit more when we get into the actual course, but this is just a quick overview. This is how we are going to use fundamental analysis, right? Pretty straightforward stuff. So I just have a quick example here to show you, example of how we use it. So Here, price of the British pound. This is just completely fiction that I used, okay? I made up these scenarios and this price chart. So January 1st, right here, let's say the Bank of England, which is the central bank of England, is tightening monetary policy and raising interest rates. So all you need to know for this example is raising interest rates is bullish for the currency. So let's say over the 6-month period, they raise interest rates 3 or 4 times, right? There's lots of inflation going on. Overall, that's bullish for the currency, and we know this, and you could have taken advantage of this really strong upward move for the British pound, right? Boom, fundamentals, took advantage of the price move. Very, very straightforward. And then let's say here, June 1st, a few months, 6 months later, the UK, right, gets in a trade war with the Eurozone, right, the EU, and the EU puts sanctions on UK goods. Pretty negative, right? This is very bearish for the British pound, and it sells off very quickly. And, you know, after news breaks this, of course, you're not going to get in before, but as the market's shifting because of this negative fundamental news, we can sell the British pound and capture this price swing lower, right? Boom. You buy as there was bullish fundamentals, and then all of a sudden things shifted, shifting factors. We have something very negative going on. We can sell and, make money. That's exactly what I am here to show you how to do. So that is all for this video. Just a quick overview of what it is we're doing, why we're doing it, and yeah. So I will see you guys in the next lesson.